I would like to apologize for the shadow up here. I don't have a very nice setup here at home, and this is the best I can do, so please bear with me. In our previous video, we talked about how the management fee, we talked about the life of the fund, and then the how the management fee is paid throughout here. I would like to talk about the management company. The reason why here at Standish, we don't really do management company all that much. I believe most of you work on mostly funds. We do have a management company group, but that is a separate group. So, your touch on management company might not be as heavy, but the reason why I want to touch upon management company is because that will ultimately help me explain why does Standish exist in the first place. All right, so let's get to it. All this management fee throughout the years, that goes to the management company, right? So in video 3, I believe, we talked about the management company briefly. So the fund and the management company are very different in that the management company is actually the company that the entrepreneur, the entrepreneur of the venture capital firm sets up. The fund, like we talked about last time earlier, is that that the fund is 99% owned by the limited partners, not by the GP. However, the GP does have discretion over the activities of the fund. So the management company, as we can see here, that the management fee of 2% goes from the fund, actually from the LPs of the fund to the management company, right? So let's take a look here. So if we were talking about the management company, am I in frame here? Let's see here. Management co. Okay, so for the management co, the revenue, if we look at the income statement of a management company, right? So the revenue of the management company, right? So this is the management company income statement. We have revenue and we have expenses, right? We have revenue and I have expenses. And so the revenue, where does the management fee revenue come from? As you can probably guess, that's the management fee that's coming from the fund, right? So revenue is management fee. Notice that the management fee is an expense on the fund's book, and it's a revenue on the on the income statement's book. So this revenue here, in a normal business, you try to maximize your revenue, and then you try to minimize your expenses, and at the end you have your net income. And the bigger the net income, the more money that the proprietor of the company can bring home, right? So here, the management fee is a revenue, and that revenue does not go bigger or smaller over time, or at least over the first 5 or 6 years, right? So over the 5 or 6 years, you have a 2% management fee on commitment. So during the fundraising period and during the investment period, you have the management fee of the commitment of $10 million. So that over that period, the management fee, you know exactly what the revenue is going to be at the management company, right? And then in the future, if there's a lockstep step down method, you would know that as well. So you can budget very, very precisely what the revenue of the management company is. And then the expenses are, once you know what the revenue is for certain, you can budget your expenses like such, right? You have, for expenses, just like any other company, the biggest expense is usually a HR, right? HR expense. And then you have rent, you have electricity, insurance, right? That's all I can think of right now. Holiday parties. Okay, and then you have net income. The video is running a little long, so let's continue in the next one.